So hi everyone, it's Wisdom Jordan right back here, and in this lesson we want to be looking at the MACD. Okay, so the MACD is a short version of moving average, convergence, divergence indicator. So in this video we shall be covering this MACD, or the moving average, convergence, divergence. Okay, so that is how this moving average looks like in general. It has a zero line, then it has a 12 period EMA, it has a 26 period EMA, then it has a 9 period EMA, like that. So that's how the indicator looks like when you put it in the trading software. But this is the basic, or this is the original MACD, moving average, convergence, divergence. But there is another one which has no these lines, whereby you only confirm signals using these lines. So lines down below the slow line, they mean a bearish trend or a bearish signal or a signal to sell, and then lines up mean a signal to buy. Okay, so the moving average, convergence or divergence, that's a MACD, is a trend following momentum indicator that shows a relationship between two exponential moving averages, or the EMAs. If you don't know what an exponential moving average is, please go back and watch a video about moving averages of a security price. Okay, so the MACD line is calculated by subtracting 26 period EMA from the 12 EMA. You don't need to know all that details. As long as you know how to put the correct settings, you'll be able to trade with a MACD. So with the MACD chart, you will usually see three numbers that are used for the settings, like we saw before. So the first number of the first is the number of period that is used to calculate the first moving average, and then we have the second, which is used to show periods of the slow moving average, and then the third one is the number of bars that is used to calculate the moving average of the difference between the faster and the slower moving averages. Okay, so still on the MACD, MACD is best used on the daily periods, just like any other indicator. These indicators were done and well back tested. When they were made by the people who made them, they normally made them for daily periods and above. So daily periods, or the daily time frame, gives better signals than H4, H1 time frames. Intraday traders, you have to note that. So for the traditional settings of that is the default settings of the MACD is 26. We have the 12 and then the 9. So this 9 here is the MACD signal, and then we have this 12 is the first EMA, and then the 26 is the slower EMA. Okay, so MACD triggers technical signals when the MACD line crosses above the zero line or the signal line to buy, and then falls below it to sell. Or for example, we say that this is the zero line. Okay, when the MACD shows lines up, this is a signal to buy, and when it shows lines down, this is a signal to sell. We shall be seeing that more when we go to a live chart. Okay, so MACD can also alert investors to a bullish or a bearish divergence when a new high in price is not confirmed by a new high in the MACD. For example, when you looked, we shall also say this one more in on the live on a live chat. But what we're saying is that this is zero line of the MACD. Okay, let's make it better. So if this is zero line of the MACD, okay, so when you have two lines, you have this, let me say the red line. Let's try to draw it completely, and then maybe you have the blue line, like on your settings, thing like that. Okay, so what we are saying that if you have a chart which is like this, so when you see there is a high on the chart, it is always in normal cases confirmed with a high on the MACD. So, but in some instances, you will find that a new high on the chart right here is not confirmed by a new high on the MACD. So that is what we call a bearish divergence. You see a new high, yet the MACD is forming a new low when these moving averages are sloping downwards, but when the price is moving up. Because in general, when the price is going high, okay, even the moving averages are supposed to be moving higher. But on a MACD, for you to confirm a divergence, in most cases, we'll see that the price is moving higher, but when the moving averages on the MACD for them are are moving in a different line. Okay, so this means that the price is moving higher but the MACD is moving lower. That shows a divergence, and which is bearish because here the price is moving higher, is moving higher, but the MACD is decreasing and is moving lower. So that one shows a bearish divergence, and then the opposite makes a clear bullish divergence. Okay, so this suggests a potential failure and then a reversal. Okay, so after a signal line cross, it is normally recommended to wait for 3 or okay, let's say 2 to 3 days. That could be a good one. 2 to 3 days to confirm that this is not a false signal. So this one we shall also see it on a chart. So for example, we are saying that for the MACD to show us a bullish signal, we shall be seeing something like this. This is the zero line of the MACD, and then maybe right here you get bullish signal. Okay, get a bullish signal. So this one, it is inciting us that we are going to buy. So when we get lines bars down, it means that we are going to sell. So in most cases, we are saying that when you see these bars up, for example, you get a signal to buy. When you get a signal to buy on the MACD, for example, you have your chart is trying to move up, and then you get a signal on the MACD which is showing you a bullish signal. It is better to wait for more bars to form in a bullish way. Sorry, to form still when the MACD is showing that it is a bullish signal, so that you can confirm this signal before you take it in order to avoid false signals. Okay, so this is how the MACD looks like. The traditional MACD. We said it is made of the zero line, which is right here, the way you see it. We have here the zero line, and when you have these bars up right here, so these bars, they are similar to these moving average crosses. So we say that when you see that this is the EMA, which is fast, and then then we have a slower EMA, is normally lower, okay, lower than this first one. So where they cross from is where we get this bar, this one here. Okay, so we are saying that this is how the MACD looks like. Okay, it has a signal line, which is this line here. Okay, the yellow line. When it crosses the blue line, okay, we have a blue line. We have this blue line. Okay, and then we have that yellow line. So when the yellow line is above the blue line, that's a bullish signal, and when the yellow line is below the blue line, that is a bearish signal. And what happens is that on the zero line, where you get this bullish signal here, or where you get a bullish cross, what happens is that the MACD shows a positive, a bar which is up. Okay, and where it crosses below here, it starts to show bars down. And then we said bars up, this is bullish, and then bars down is bearish. Okay, that's how the MACD works. So here, this is a bearish signal, and then right here we initiate bullish signals, and right here on these red lines here we initiated the bearish signals, and the same applies to these lines. When you see this blue line, sorry, when you see the blue line right here, the first EMA above this line here, you get what we call the bullish signal, and then the blue line crosses above, sorry, below the yellow, you get bearish signal. Okay, the same applies here. Every time they make a cross, you get a signal. And right here, when they make a cross, also get a signal down. We shall see that more on what? On the chart. So in coincidence, this works that every time you get a cross which is bullish, here we are going to get a bullish signal, and here it worked very well that the price still went up. And then in again, when you see a bearish signal, it shows that here we are going to get a change in trade, and which we finally got right there. So we are going to see this on a live chart, not worry. Okay, so in this channel, we shall be using the MACD as an indicator to show us the current market trend. So we shall be using the MACD as a primary indicator or as an entry signal indicator. So we shall be using it to get entry signals on this MACD. Okay. So right now we are going to move on to a live chart, and then we shall be seeing the MACD, how to set it, and then how to put it on your chart. Okay. So we are onto this live chart. Again, when you play a look at the chart, it is plain. It has nothing on it entirely. So we want to insert in the MACD. So we looked at the Bollinger Bands right here already. So the MACD should look at the trend indicators. MACD is not by its and oscillators. We have the MACD here. So when you look here, you get a panel for settings. So you can get the style, levels, etc. But we don't need any levels. Under colors, we can leave for blue and then the red line. So the signal line is red. So when the red crosses the blue, we get a signal. Okay. So let's make it clear like that. And then we have parameters. We have the EMA, which is first MA, then we have the slower MA, then we have the MACD. So this one is always over a period of 12. Reset. Click on reset to get the default settings. 12 first EMA, then 6, and then the signal line is always 19. So we always apply it to close. We apply the price to close. We don't use the open prices or the highs and lows. We normally use the close price. The close price is the price exactly at which the market closed on that trading day. Okay. So you click OK, you get a MACD. This is how the MACD looks like. Okay. Let us try to zoom it in. Levels, colors. Let these blue lines look a little stronger, like that. Click OK. So I think here everyone can clearly see we have this red line, okay? And the red line right here is the signal line. This red line. We have this red line, it's the signal line. And we are saying that every time this red line crosses below the zero line, okay. So on the MACD, we have a zero line. So on the MACD, we have this zero line right here. We have this zero line right here. Right here. There's a zero line, okay. So we have the signal line, which is this red line. So we have this zero line right here. So when the price crosses above the zero line, we get a bullish signal. We are going to buy, okay. And then when the price moves and then the signal line crosses below the zero line, yeah, it becomes negative, and that means to sell, okay. As simple as that. That's how the MACD works. So in some cases, you're going to see this type of MACD which has only this zero line, this line only. But in the other instances, you will see another MACD, it has these bars, but they also have another line. For example, it moves in like that. Two lines, okay. So it does not confuse you. It all works the same way. You can accept to use the bars, or you can use these lines, okay. When the lines cross, of course, you get the same thing. When the lines the lines are showing a bullish line, these moving averages, when the faster EMA, okay, is above the slow EMA, you get a bullish signal, and then you get bars up. And the opposite is when the first EMA is below the slower EMA, you get a bearish signal and you get a buzz down. Okay, so it doesn't matter. So when this signal line crosses below the zero line, you get a bearish signal. So here. And then when the zero line is above, you get a bullish signal right there. Okay. So as simple as that. So we buy when you get a bar up, then we sell when you get a bar down. Okay. So as simple as that. So for example, when you look here, you get a very clear signal. So see, then the price moves up. So for example, here you have this bearish signal right here. Okay. And this was the bar to sell, but it did not work. So here you got stopped out, you lost. Okay. So here you get a bullish signal around right here, and then the price is still going high. So that's how the MACD works. Okay, so why am I talking about the MACD? Well, we shall in some instances be considering it when we are trying to choose which indicator is good and which indicator is not good. Okay, so when you look, we want to confirm with this MACD and then see, is it a good or bad indicator? So here it gave us a bullish signal and it worked. You can see the price moved higher. So right here, it gave us a bearish signal, get a bar down, and then it moved downwards by some small moments. Okay. So for example, when you look around here, it gave us a bearish signal, and then we got a sell We put the market down. Okay, so it moves still bearish. It's a very beautiful indicator. When you look here, it does not change at all. When the market does not change, it stays bearish. Even the market stayed bearish. Okay, that's you can see that it all stayed bearish. And when the market tried to change direction, even the market gave us a change signal right here. It gave us a signal to change. It was around there. You put a stop loss 1.5 of HR. Of course, in trading, you cannot avoid losing trades. They are also part of trading. So that is how basically the MACD works. So in the conjunction to this video, I want to make a recap on the Bollinger Bands. So we can try to mix the MACD with the Bollinger Bands and then see if it works good. So Bollinger Bands, okay. So we said when the price hits the lower Bollinger Band, okay, here right here, for example, we are looking to get a bullish signal. So what are we going to do? So here we are going to look for a bullish signal, and after the price has hit the lower Bollinger Band, so we are going to look for a bullish signal on the MACD right there down. If we get it, we take it. If we don't get it, we do not take that trade. So for example, when you look here, so the first thing we have to check and see, yes, the Bollinger Band has given us a signal, and then we have a candlestick pattern. It's a tweezer bottom. Right here we have tweezer bottoms. This candle and this candle, they have similar bodies. This one becomes a tweezer bottom. So, but when you look at the MACD, is still bearish. The MACD is still saying that we are going downwards, but the Bollinger Band is saying that we are going upward. So do we take that signal? Of course not. Okay, so here price hits the upper Bollinger Band. Okay, we get a beautiful bearish candle, and in conjunction, we look down at the MACD. It is showing us that there is a bearish signal. We are still bearish. We are still in the sell trade. So when you put here, then you go down, of course, you make some profits. So here price hits the lower Bollinger Band, and then we wait to get a beautiful candlestick like this one. So but the MACD is saying that we are still bearish, so we do not buy this signal, we leave it to go. Okay, so right here, up here, the price hits the upper Bollinger Band, and then we get a beautiful bearish candlestick pattern. So we are combining three things: number one, Bollinger Band; number two, we are combining the candlestick patterns, and then we are combining it with a MACD to form a trading strategy. That is how our trading strategy is formed. But do I urge you to take this trading strategy? Of course not. Okay, so when you look here, we have this beautiful bearish candle. Okay, this one here. But when you look at our MACD, moving average convergence divergence indicator, it is saying that, oh, we do not take that trade, we are still bullish. Okay, so it means that here we wouldn't have taken this trade because the MACD is saying no, we are not selling. Okay, we want to see confluence. Okay, and then confluence is whereby at least two or three things occur. And then we are saying that we have a signal on what? The signal on the Bollinger Band. The Bollinger Band. Then want to see a candlestick pattern. Then want to see a signal on the MACD. And then the other thing we want to see is that we have to see a trend. Just a trend, okay, which does not matter so much because the trend might be changing. So that is what we want to look at. That's our checklist. Okay, so right here, when you look here, we have Bollinger Band signal to sell, and then yes, do we have a signal for MACD to sell right down here? Of course, it is saying, and the MACD is saying no. We want to see if there is a candlestick pattern. Of course, there is a candlestick pattern. So do we take that trade? Of course not. Why? MACD is saying we are not selling. So we leave that trade. As simple as that. That's how trading goes. So we try to look for a new signal, move up, move. Forward. So for example, when you come here, we get a signal from the Bollinger Band. So we need to make a checklist. So we go to Bollinger Band, they're saying we are going to buy very soon. Of course, yes. Do we have a candlestick pattern? A bullish engulfing clearly. We take that one. What about the MACD? The MACD is saying we are not buying. Wait, we don't take that signal. So MACD is saying please don't buy. And is it a bullish trend? It has not yet formed. So we would have missed out this signal. We don't trade there. So here, Bollinger Band is saying yes, we are yet to sell. We take it. But the candlestick pattern, is it there? Of course, we are seeing pin bars right up there. If you remember pin bars right here, we have the pin bars, so we have a candlestick pattern. And then we look at the MACD. The MACD is saying that we should go short. Let us see. Here. So MACD was saying we go short. Here. And then the MACD was also saying that we are short. I think everyone can see this clear. This is a short signal on the MACD. So we would have taken our trade from here, and then catch the wave down. Okay. Did the trade continue downwards? Let us scan check. Let's check if the trend continued downwards. Of course it did. So this was a beautiful signal from the MACD and other trading pieces. So for example, now when we come here, this is our last signal. Okay, we can try to look at this. For example, when you look here, do you have a candlestick pattern? No, we are not seeing any, but the Bollinger Band is giving us a signal, and then the MACD is saying we sell, but the bullish signal, we don't take that signal, of course, we chill it. So we wait. For example, here, do we have a candlestick pattern? We have this bearish candle here, is a bearish engulfing from the previous candle. So that is confirmed. Then we'll have a signal from the Bollinger Band, confirmed. Then we have a signal from the MACD, of course. We also take that signal, and then we catch the wave down. Did it move downwards? Let's check and see. Yeah, it did. So that's how we trade. Okay. So in conjunction, we add on different indicators, and then we see, does it work on this pair or it doesn't work on that pair. So that is how we make trading. Okay, as simple as that. There is nothing in between. There's nothing to hide. Okay, so we would have added on the ATR, but we're not entering those signals. So you can go back and watch a video of ATR, and then you see how to use the ATR for entries and how to get out. Okay, so thank you so much for watching this video. So if you've not yet subscribed to the channel, please do subscribe, because more videos are coming like this and they're gonna be helpful. So here we are on the surface. We are going to get deeper and deeper and deeper once again. So bye bye. It's Wisdom Jordan. I'll see you in the next video.